Let's take a look at the global market highlights and news for March 4th, 2014. Ukraine on the verge of financial collapse. Stocks sink as traders turn to risk aversion. And gold hits 2014 high as safe haven trades. Let's take a quick look at what is happening in the global markets now. Wall Street exchanges closed sharply lower as investors shy away from riskier assets amid worries about tensions between Russia and Ukraine. At the closing bell, the Dow Jones dropped 153.68 points to 16,168.03. The broad-based S&P 500 slumped 13.72 points to 1845.73, while the tech-heavy Nasdaq tumbled 30.82 points to 4277.30. Stocks were down as much as 1.5% before Ukraine's Prime Minister said the worst phase of the crisis with Russia appeared to be over. Still, tensions are still bubbling in the region. The concerns forced European markets sharply lower, with Germany's DAX leading the decline by closing 3.4% weaker. Britain's FTSE and France's CAC also saw heavy retreats. The hardest hit markets were those in Russia, however, where benchmark indexes plunged over 10%. The news in Europe overshadowed better than expected data reads in the US, with manufacturing and consumer spending numbers topping expectations. Europe's main stock market indices closed lower on Monday amid a standoff between Russia and Ukraine, with Frankfurt's DAX 30 tumbling 3.44% to 9358.89 points. London's FTSE 100 dropped 1.49% to 6708.35 points, and Paris's CAC 40 shed 2.66% to 4290.87 points. In the foreign exchange market, the focus on global trading remained on Ukraine. European equities were hit hard, but euro to dollar showed again remarkable resilience. Risk-off sentiment supports the yen, but the losses of USD to JPY were also very moderate. Most Asian equity markets were in negative territory as rising uncertainty on Ukraine kept investors in risk-off mode. However, the losses were moderate, and so were the price swings in the major currency cross rates. USD to JPY drifted below the 101.50 mark. Euro to dollar dropped off Friday's highs north of 1.38, but the correction remained very limited. The EMU manufacturing PMI was revised slightly higher, but this factor was also largely ignored. Euro to dollar, which seemed almost immune to the market turmoil, settled in a very tight range around the 1.3780 pivot. Euro to pound was again an oasis of calm in a nervous global market environment. The pair held a tight range roughly between 0.8225 to 0.8250. Sterling lost a few ticks against the dollar and the euro early in the session, but the downside remained well protected. Moving to the commodities market, prices jumped sharply higher today due to increasing tensions in Ukraine. Brent crude oil price topped above $112 a barrel. Gold futures rose to their highest levels in 4 months, and also soft commodities rose sharply today. Gold futures surged on Monday as the escalating crisis in the Ukraine spurred a flight to safe assets, lifting prices to their highest settlement since late October. The yellow metal is seen by many investors as a safe haven in times of increased market volatility. This is Amy Anderson from Option Rally signing off. Follow me on Facebook and watch for our new financial terms of the day in our weekly event news. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. See you tomorrow.